Once again, the Fed has skipped a rate cut for January. We are going to be talking about that, Jay Powell's presser, implications for rate decisions moving forward, and much more today on Money Never Sleeps. Welcome back. Good to see everybody today. As we get going, do us a favor, hit that like button, subscribe to our channel if you haven't yet. Nothing Kevin or I say is financial advice, so please do your own research before making any buys or sells. Kev, we have this Fed decision, we have Jay Powell's presser, we have tech earnings, a lot going on in the market right now. We're seeing red for the most part across the board. NASDAQ taking a beating down almost 1.75%. A lot of the tech names out there are getting hit pretty hard today. Google had subpar earnings. They're getting beat up. Microsoft down almost 2% with bad earnings, or, worse than expected earnings as well. So a lot to discuss there. What do you feel like is the biggest thing going on right now in the markets?
In the markets itself, probably affecting the markets for sure. I think it's the collateral dollar shortage that we talked about for a long time. I think that's the thing that's silently hurting the markets more than anything. But the thing that's affecting the markets today, and at least the U.S. equity markets, is 100% tech, right? I think that today was a really important day for the Fed to speak. You kind of are seeing a bit of a sell-off. It's more than I expected. I thought we were going to kind of hold it up going into earnings on Thursday, and then Friday would have been just an absolute massacre on the close. That was my kind of thought process, but we're seeing a little bit of premature people pricing in the fact that we're probably not going to see rate cuts for a few meetings, and tech still sucks, right? I think the expectations of those are still a little bit too high, and then when reality sank in, it was nothing but one big wet fart, and it was just absolutely not what people were anticipating. I mean, it was we're one push away from soiling our pants at this point in the economy, right? If tech decides to do a fucking triple Lindy into a swan dive, we're pretty much done for. Just the way equities are weighted. So we're in a really interesting place right now. I'm very excited because we saw volatility pop today too. So, I think it's just a matter of time. We said that for a long time, but I think the scenario is just kind of ripe for seeing a pretty decent sized correction in maybe the next few months or so.
Yeah, the Fed, once again, did not raise rates. They didn't cut. They're holding steady. And, a big thing that moved the markets was Jerome Powell saying he's not anticipating a rate cut in March. And we've now seen, based on the CME futures, they're showing a 64% chance of them not cutting rates. So definitely a big move there. We had discussed for a while that, at the end of last year, they had said in the meetings and in the dot plots that they're expecting 3 rate cuts in 2024. And the market still just pushed ahead and said, nope, you're going to cut 6 times. And it didn't really make a whole lot of sense to me because the Fed, for this entire market cycle, going back to COVID and the, post-pandemic recovery, they've been very straightforward. And they haven't really been hiding anything. They haven't wanted to, do anything to spook the markets. And so that's why it didn't make sense to me. And I said on here over and over again that I'm not going to believe we're going to see 6 cuts until the third has happened and we're getting ready for a fourth. Okay. It didn't make any sense. And so the markets, as soon as Jay Powell said that, took another leg down, So I think we're starting to see this repricing going on out there. And that combined with, below expectation earnings for tech could lead to a very problematic situation, even if there isn't a bubble to burst.
Oh yeah, absolutely. And there is a bubble to burst. That's I think you and I and everyone else on CNBC is finally starting to acknowledge it. I sent you in house that thing where the guy's name is Josh Brown, biggest bull in the world. He was saying that it doesn't matter if the Russell is down. Everything, we beat it. We got the soft landing, kind of contrary to what Powell had said today. Everything is getting the labor market strong. We're also over 100,000 jobs that have been lost in the month of January today. I mean, I didn't even realize today is also the monthly close too. But it's a very it's a very funny situation where we are right now. The equity markets, and even like you said, I think this is with the price action of what we're seeing right now, because even though it's 58 points down today, it's not really anything. We were up 36 points yesterday, right? So I think 100% this is repricing. This is not even like ripping the band-aid off of anything yet. This is still a fairly small correction that we're seeing. We're going to see a bigger correction, I think, that's kind of tells us where the market eventually finds itself. But for right now, I think the markets are definitely just pricing in the fact that, like, okay, maybe not March, but maybe May. It's kind of like that type of mindset I think they're having. It's unfortunate because it's just the longer these rates stay higher, the more problems that are already present just are amplified. So it's a really dangerous place. And, he was saying 2%, that's when they're going to start planning the cut, maybe a little bit right before it. But hey, man, we could be here for a little bit. I don't necessarily agree with that. I think we're going to see deflation sooner or later. But, I mean, I don't know. It's a very tricky spot right now in the markets to be bullish, if you're asking me.
Yeah, I'll tell you one thing that liked what Powell had to say, and that was the dollar. Saw a nice little move up there. We've seen the VIX up a little over 5% on the day, so more volatility expected
8%.
ahead. So I'm seeing on TradingView 5%, but if it's 8%, that's a win right there for sure. What else? There wasn't really too much that Powell said that was really surprising. He brought up the fact that there's still a long ways to go with the fight against inflation. It's going in the right direction. It has been for a few months, but they can't take their foot off the gas quite yet because they want to avoid that bounce back that many are expecting. I know that your best friend, your new amigo, Peter Schiff, he's expecting a return in inflation. I know that you guys are probably whispering sweet nothings to each other at night about
I don't
that
agree
one.
with him. No, we're a fighting couple. I don't agree with him on that one.
Okay. So they're not going to take their foot off the gas quite yet. They see the struggles that a lot of people are going through and how that's impacting consumer sentiment. So they're trying to balance, it's like the Thanos thing again. They're trying to balance what's right for the long-term health of the economy with what's best for people in the short term. And so it's a tough challenge for them, but that was, not too much else for us to say there. Do you want to talk about some of the earnings that came in yesterday?
Sure. Let me just get into one last thing before I drop this pen, because this is what the Fed's pretty much going to do. They're doing this right now. And Joe Biden, there it goes. What I was pretty much going to say was he did slip really bad in that meeting. And he says that we're in risk management mode. That is not something you want to hear the fucking Fed say at all. And that's why I think that, I was more bullish on the fact that we are going to see rate cuts sooner than later. The fact that they're prolonging it, and it seems like they will, and again, they're looking outwards probably to see what happens with the banking crisis come March. Bank funding program is going to be gone. We're seeing a lot of problems in the banking sector today. I think that slip of the tongue kind of tells us it's like, we're cautious right now. We're not going to tell the public what's going on, but there might be a potential, I don't know, maybe there's an event that causes us to have to change tune real quick. Kind of thinking that that's always in the back of his mind. And, he slipped a lot today, I feel. I think he said a lot of things that maybe he should have been more quiet on, because he's usually pretty good at that. But it seems like, yeah, Chris, great point. Makes sense to wait till May, get a couple months of data after BTFP ends, and where the markets end up in another earnings cycle. Absolutely. It's going to be, I don't see it getting better. Let's put it that way. But there is a risk of waiting too long to cut. Then there's a race to zero. Can't have an economy that's sustained at zero. Last time we did was COVID, and look what happened, right? So we can get into the earnings because that's just as important too. But just something I had to add real quick.
Yeah, let's do it. There's gonna be two more meetings, between now or including May. So we got March 20th is the next rate decision. I misspoke yesterday and said March 1st. It is not. It's a little bit longer away. So we'll have plenty of data between now and then. And then once again, no meeting in April. So there's a good amount of time between the first three meetings of the year to give them opportunity to digest everything. And, maybe we get cuts in May, July, November, December. Like it could still be more than three, but it wouldn't be surprising if May was when this all begins. But yeah, let's get into earnings. Let's start with tech from yesterday. What did you see, both in the numbers and reading between the lines?
Yeah, I mean, I think the expectations were way too high for tech, right? I think that's the one thing that's been really a problem for a lot of these companies. Like Tesla, it was a huge problem, right? They had expectations set way higher, missed them by, I mean, even a small miss at that point is just critical because it's like, okay, well, maybe things aren't as good as we thought because even after we had our expectations so high, year over year profits are still down. Right. That's the thing that I think a lot of people are starting to realize here. And a lot of these companies are kind of telling us because after each earnings call, it seems like there's cost saving job cuts that are flowing out from the headlines too. So I was looking at everything. I thought Google made the most sense why that one would miss earnings, right? Companies aren't necessarily, I think their ad revenue was abysmal. Companies aren't necessarily, using ad space on Google for the time being. Kind of tells you that they're probably not doing too well themselves. Who else was it? Microsoft. I mean, shot up to 413, came right back down. It seems like they're doing okay for the time being. I don't necessarily know how long it's going to last. And then Starbucks was an interesting one. Did you see Starbucks's earnings and then how the price reacted to it in the post market?
You sent it to our group chat, so I remember looking at it from there. I didn't see how the price reacted in the after hours, though.
It was terrible. Like they missed every single aspect of it. And it kind of showed that the consumer isn't splurging nearly as much. And I'd be really interested to see how we talked about Chipotle yesterday, how companies like that people were going to all the time. It's like, I got to get my Starbucks fixed, got to get my Chipotle fixed, kind of pulled back. So it's going to be really interesting to see how some of those are doing as more earnings come out. And again, if we get another earnings season to see how those play out, might not be good. Might not be good at all. But I thought it was really interesting to see that. But I think people thought of it as a dip opportunity. It was like good news is bad news. So it shot up higher than where it closed yesterday. And then next thing you know, you got a massive red candle today. Here, I'm going to pull this up because this chart is just absolutely hilarious on Starbucks. Where are we? Spucks. Look at that red candle. It makes no sense. I mean, it makes a lot of sense, right? So it opened up here and it sold off the entire time today. But the fact that it in the after hours market, it went up and just to squeeze everybody just before absolutely trapping them. I don't know. I mean, and again, we're not talking about a lot. We're talking about 50 cents here. But I mean, the fact that it shot up, I mean, it's only down 50 cents today, but I mean, it started up way higher. I don't know why it says 50 cents. It's way down more today, right? Opened up here currently. Yeah, it's down almost like 4.75%. This trading view must be off for me. But yeah, this is definitely a massive dump. And some of the tech companies rebounded a little bit, but I don't know. I think tomorrow is going to be really important to see how these react because if majority of the big six are not doing great, what reason is there for any of these indexes, any of these other smaller companies to be holding position on them, right? It's probably going to lead to a bit of a market dump. So I'm interested in seeing how that plays out tomorrow, especially with Meta. Meta, I think, is going to be just like Google.
Yeah, we have some more big earnings reports coming out today, tomorrow. This afternoon, we are going to get MasterCard, Samsung, and Boeing. The Boeing one should be
abysmal
after everything that's gone on there. And then tomorrow, yeah, Apple, Amazon, and Meta. Really excited for that. What?
I'm a Vision Pro here.
Okay.
Dude. Dude, did you see that video?
Yeah,
it's the stupidest thing ever.
I have no interest in getting the Vision Pro. Maybe just to get and never open as like a collector's item, and someday it sells for a ton of money like the original iPhones did. But I don't have the patience for that.
You mean like the Zune? It's what it's probably gonna end up being.
Zune,
like.
Yeah. Oh my god. Fucking Zunes, man. All right. Yeah. Go ahead with whatever you're gonna say there.
No, I'm just gonna say the Apple Vision Pro is the stupidest thing I've ever seen. That lady on CNBC, yeah, dude, looks like we're straight out of Star Trek. Even worse, it looks like you just came down a bunny hill. I think it's the dumbest thing in the world, and the fact that it's $3,500, and the majority of people that bought it were employees who had like a massive discount on it. I don't know. I think Apple's gonna might be a bit rotten going forward. I don't think that's any type of innovation moving. I was just looking at it through the whatever they were seeing because you can record through it too. I'm like, this looks like a pain in the ass to fucking have on your head. Especially looks like it's heavy too. People are gonna bitch. People complain over small things. Imagine that thing for like 2 hours. I don't know. Yeah, but yeah,
Apple's not looking good. They're on this is the 6th consecutive losing day. Let's see here. Over the last 6 trading days, down little over 5%. So that is not ideal heading into earnings. Maybe it's just trying to adequately minimize expectations. I don't know. If
Triple
they come
top?
in, yeah, double top.
Triple.
Triple top, quadruple top, who knows? If earnings don't come in, if they come in under expectations like badly tomorrow, whew, look out, man. I'm not trying to predict the future there. It's just the momentum is not on their side, and it could get ugly in a hurry.
You should be pissed at Bank of America for saying they expect it to go up 20%. Fuck you guys. Yeah, Brian Moynihan or Brendan Moynihan, whatever his name is, your entire staff screwed everyone off that 20% outlook for 2024. It is not looking great since. It's almost right back to where it was before that Bank of America gap here. I mean, look at this. It's going to probably fill it if we have bad earnings tomorrow. But this is very good for my Apple put. I still got some time. I'm happy. Let me just clear a few on there. And then I'll close it. And then Apple, you can do whatever the hell you want. But seems like it's going to be pretty dicey with that earnings call. I'm not convinced. And just structurally, if we look at this, once, twice, thrice. I mean, that's a triple top. I don't know what to say. I mean, even this right here, it could be a head and shoulders, right? That technically is a head and shoulders right there. But I don't know. It doesn't seem too good for a lot of these tech companies. Even Amazon, right? Amazon yesterday pulled back pretty good. Right in the after hours, you can see I had a little bit of a gap there. Meta pulling back finally. Fucking, I have no idea why Meta's doing well at all. Google's the one that was really good. Look at that gap. Oh my goodness, look at that gap, J-Web. That's a nice one. That is a nice gap right down there.
It is a doozy.
That's what we love to see on the way down. We don't like those on the way up, but on the way down, they're beautiful. So I mean, tech is really in a really dicey place. I mean, that's all we can really say. Even Tesla's pulling back from where it shot up to, right? So I'm really interested in seeing how these earnings play out, and I think that we are still in a pretty good place for a massive sell-off Friday or Monday, depending on what the market sees as the outlook for tech moving forward. So February could see some volatility.
All right. What else do you feel is worth looking at in the charts today? We started a little bit late. We don't need to run long or anything. We have plenty of stuff to discuss tomorrow too.
Absolutely. Let's just talk about the banks, right? So this is something that's really interesting. New York Community Bank Corp dropped 37% today. That's currently what it's sitting at. It dropped way further than that. And I didn't say 3.7. I said 37, right? That's a massive move. From here to where it went all the way down to, it's about 46, almost 47%. Now, the reason I say this because these are a lot of these regional banks, and people are kind of afraid that the banking crisis is coming back, and they're just primarily looking at regional banks. I think that there are two problems facing the banking sector. One, obviously, is the commercial real estate issues. Evergrande is going to complicate this way more. We talked about how commercial real estate loans are going to be repriced because they're going to be doing a fire sale. We know a lot of these banks have exposure to it by way of commercial real estate, whatever type of assets they have on their books. So held to maturity loans, I'd be very curious to see how those play out in Q1 earnings that we should get later on this year. Q2 will probably even be worse. But this is a really bad sign for regional banks. I mean, could it gap up and fill this? Maybe. I just don't see that necessarily. Other ones that were having some problems, I saw Zions was having some problems this morning. It was down. Yeah, it's down 5% right now. Some of these regional banks are already starting to see some cracks in the system, right? The important thing here is we got to take a look at the Bank Term Funding Program and see how that's reacting, even now that the rate has increased significantly. I think it was like 4.9% the borrowing window. Now I believe it's 5.35, 5.4, something like that. It's significantly higher. So if you're starting to see some of those, the total of the Bank Term Funding Program go up, that is a huge sign that there is problems in the system, and the banking crisis is probably going to come back at some point, the end of Q1 into beginning of Q2. I'm very curious to see how fast this market does move. And the other thing I talk about banks all the time is that the big banks are just as much at risk because of obviously the treasury market, which has been something that they messed up on early in 2020, 2021. But they're also at a huge risk because of deposit flight, right? A lot of people took their money out of their banks, and they're pretty much operating off of not as much liquidity that they once had. So I'm not saying that there is going to be a bank run. If there is a bank run, obviously everything just blows out of proportion and gets worse before it gets better. But All it takes is one bank, New York Community Bank, this one that happened today that dropped 37%. Don't be surprised if you see more banks that do stuff like that, even in the 10% range. If you start seeing stuff like that, you should be very cautious, because I think that's a really good sign that the absolute worst is coming for both commercial banks, regional banks, and then obviously the big banks. The big banks problem obviously is deposit flight mixed with also bad loans. And again, we can't say that Evergrande doesn't affect any of the big banks. This is one of them right here, and that is UBS. UBS is one that we need to be careful of. They took on Credit Suisse, and they also bought up most of the, when Evergrande needed to get some liquidity, they bought up some of their debt. And it was between them and HBC and BlackRock. Those were the three big banks that bought a lot of Evergrande debt back in 2021. So out of all those, HSBC and UBS are the ones most likely to get hurt from that. UBS just has too much. I think there is a good chance we could see banking problems in Europe. It would be UBS and Deutsche Bank, just my opinion, to watch. I'm not saying that they're going to go under, but I think those are the important ones to watch. So I think we're seeing some cracks in the banking system. It's going to be even better if we get more of this data and it's just coming back worse. Seems like, I just looked at the indexes. Indexes are down really bad right now. But yeah, we're not out of the woods yet. Even in China last night, 218 points down again for the Hang Seng, back under 16K, another 1.39%. I mean, see where it is tonight. Right now, it's about, we're right on the line of seeing if it's going to hold this historical level of support. If it loses that again, guys, we got 30% below us. So I'm really interested in seeing how this plays out. But banking quietly is a problem. Jerome Powell saying that rates are going to stay higher for longer for the most part. Even more of a problem. This is kind of the reason why some of these banks, the bigger ones, are also in a lot of shit, right? They can't make new loans, new debt. There's no money being created in the system, only destroyed.
Just destruction everywhere. Okay. Anything else you think worth noting before we wrap it up? Like I said, we'll be back tomorrow at our usual time to go through the latest of the markets. Go ahead.
Yeah, I'm just going to say dollar doing well. I think you said it really well today. Keep an eye on this. Gold, seems like gold pulled back a little bit. Gold shot up about $250. Now it's down about $17 or so. You can see that red wick again, kind of, and through my chaos. This candle today, it shot all the way up here. Jerome Powell started talking, shot back down. I think they're seeing that there is no risk in the market, so maybe they're selling it off a bit, and the dollar is going up. But it's not risk necessarily that is going to kill the equity market, even though the equities are down. It's risk more so of like a financial crisis. People need to put money in gold. I just don't think they believe it yet that there is going to be a financial crisis or some type of banking crisis or whatever it is that brings this market down. But the thing to watch right here is the VIX, 1407 right now. Obviously, we talked about this as well going up. This is a trade that's going to get unwound. I don't necessarily know when or how, but there's a big VIX, almost said a big VIX pimp, a big VIX pump coming soon to a trading view screen near you. I think that we're going to see a pretty good gap up one of these days. Something's going to come, whether it's in March, April, and even in February. Honestly, we could see the VIX likes to pump in February. I hate to say that, but if we look at this historically, let's look at where's February here. Yep, right here. February 2020 started to shoot up. Obviously, what happened in 2020? If we go back to 2018, Volmageddon, that happened in February also. So the VIX likes to pump in February, and February is also the second worst month for the stock market and equities. So kind of makes sense that if we do see a pump. Was I even sharing my screen? No, I wasn't. No. Whatever. Don't even worry about it. February, bad month. You guys, we'll talk about it tomorrow. It's not. Oh, I guess tomorrow is February. So yeah. So just be careful out there, I guess.
Strap in, motherfuckers. That's what he's trying to say. All right. That's going to wrap it up for today. Appreciate you being here with us. Chris, Randy, Mr. House, the whole gang is here. Once again, you guys are the best. We'll be back tomorrow at our regular time, 2 p.m. Central, 3 p.m. Eastern. Everything going on in the markets. We'll have more jobs data. We'll have more earnings to look at. We'll have more anticipated earnings to look at. It's an exciting time out here, folks. So, get some rest. Be ready because money never sleeps. All right. That'll do it for today. Have an awesome day, everybody. Oh, yeah. Once again, like, subscribe, comment, blah, blah, blah. You know the drill. Stay safe out in the markets, and we will see you tomorrow.
Take care, everyone.